Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with a special series on how attorneys are approaching recent SEC accounting guidance as it relates to SPACs. My co-host this afternoon is Eklavya Saraf, global head of SPAC listings at Nasdaq. We are joined by Christian Nagler, partner at Kirkland and Ellis, to discuss.
Thanks, Jill. Christian, thanks so much for your time today, and thanks for joining us for Trade Talks. So the SPAC markets was very strong earlier this year. Given the SEC's recent accounting guidance, can you please recap the impact on SPAC sponsors for us?
Sure. Well, it's certainly made it a little bit more challenging to do a SPAC IPO right now, but I think we just need to take a step back. By the mid-March or towards the end of March, we already surpassed in 2021 all of our 2020 records. So we had a lot of money put into SPACs already. I would say by the 3rd March, and I know you've seen this because you're so active in SPACs, but by the 3rd week of March, we already saw a slowdown in SPAC IPOs.
Right.
I think there may be 3 or 4 in the 3rd week of March, and that was it. So when the SEC put out their announcement on April 12th, I know you hear a lot in the press about how this has slowed down the SPAC market. It certainly hasn't helped, but the market had already spoken, I think, to SPAC sponsors. And I think we're allowing that money in the system to do its work and start announcing more deSPACings, and that should open up the market slowly. But I gladly discuss the warrant issue.
No, that's a very good recap, and I appreciate your perspective. So how has the guidance affected deSPAC transactions that you're seeing?
So for deSPAC transactions, it's a little bit more challenging. So just to rehash, the SEC came out on April 12th and said for many of our SPAC transactions, the warrants, which are often a feature of the unit that's offered to the public, so you have a common stock and a fraction of a warrant, that warrant should get put on the balance sheet as liability rather than as equity treatment, which is quite confusing because there isn't really a dollar amount owed. It's not an actual money that the SPAC owes, but because the way the accounting literature is written, the SEC has, I would say, reinterpreted things and reinterpreted SPAC transactions. And so now many SPACs that show the warrants as equity now have to show the warrants as a liability. And for deSPAC transactions, that's causing a lot of SPACs to have to restate their financial statements. And we've seen clearly this is not viewed by the market as material at all. I don't think anyone cares if it shows up as liability or equity. So they've had to restate. So it may have delayed things a few days on the deSPAC end, but it certainly has not shut down deSPAC activity.
Right. And what was the initial reaction of the SPAC sponsor community? And what do you think is top of mind for the SPAC community since this guidance was given?
I think the top of mind, and if you read this in the media, that this was simply the SEC finding a way to shut down SPACs. And I don't think that's exactly the case. Speaking to the SEC, they point out that they didn't go looking for the issue, that the issue was actually brought to them. There was a filing where the issue or the registrant said, we are bringing this issue to the SEC for their interpretation. So the reaction was, it looks like the SEC is shutting down SPACs, and you saw that in the media as well. But that's not what's really happening here. I think when you really think it through, it looks like the auditing industry and the SEC together have decided that maybe the way things were done, it was accounted for, it should have been accounted for differently. So while they're frustrated, I think they're slowly beginning to see that it's really the market that's shut down, because of investors, not because of this issue. Right.
So what are the steps that your firm taking in changing the structure of SPACs, just given the recent SEC guidance?
So I think you'll see just to explain it easily, you'll see the warrants change slightly. We have 2 sets of warrants generally. We have the sponsor warrants, which are at what we call the at-risk capital, because a lot of money is being put in for those warrants. And then we separately have warrants sold to the public that we call the public warrants. So we have private warrants held by the sponsor and public warrants. And most SPACs have a feature that says, well, if the sponsor sells its warrants to somebody other than a permitted transferee, which may be their affiliate or someone in connection with the business transaction, that they then morph into public warrants. Now, That was partly done so that the sponsor had liquidity. If they wanted to sell the warrants, they could sell them, and the warrants have the same terms of the public warrants, and there's already a trading market for that. So one change you'll see is that it could be that the sponsor private warrant simply always stays a private warrant and doesn't change terms depending on who holds it, because in the accounting literature, there isn't an input for a warrant having different terms depending on who the holder is.
Got it.
That's one change you'll see. I don't think the overall changes that the warrant terms will need is really going to be so material to anyone.
Good, good, excellent. Thanks for that. And how's your perspective for SPACs changed, if at all, given the rule changes? And do you have a sense of what we can expect from the SPAC market the rest of this year?
I think it will come back, maybe not the same pace as it was, because it was on quite a fast pace. Remember, we were on a pace where we had 25 SPAC IPOs a week, but only announcing 5 what we call deSPACing transactions a week. Now it's flipped. Now we have maybe 1 or 2 SPAC IPOs a week, which shows that you can get by the warrant issue.
Right.
And you have maybe 5 deSPACing transactions a week. So the deSPACings are now outpacing the SPAC IPOs, which is moving more towards, I think, an equilibrium between the two.
Very good point.
We're optimistic. We're still seeing a lot of deSPAC activity. Either we have SPACs obviously speaking to companies about doing a transaction, but also we're seeing a lot of privately held companies still, despite all this, considering selling to a SPAC because they think it's a better process for an exit as compared to an IPO.
Fair point. Jill, back to you.
All right, Eklavya, Christian, thanks for joining us on Trade Talks this afternoon, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me.